Hello friends, hope you're doing good. Welcome back to my channel. Please like, subscribe. So today's topic is about analysis of Hindustan Petroleum Corporation Limited. So currently, if you compare the price to earnings value, so this is really undervalued compared to the industry PE of 88.57, and also actually there is a dividend yield of 8.01. I thought of if you're looking for a dividend income. uh, Actually also they're going to pay next month, so you can think of buying this one, since market is overvalued as of now. That's why you can also think of these kind of ideas where it is undervalued and the price may not correct so much like that. So this is what the graph quickly, if I show you the maximum graph. So as you can see here, usually this kind of company, it will only consolidate for a long term, because this is also mainly dependent on some of the government policies. Earlier, in the Congress government, the price of the fuel, petrol, diesel, and other things was actually determined by government. But currently, I think, as I understood, so Modi government has actually kind of uh, made it free to the companies to decide. I think that's why these companies are making money, and also the re-rating has happened here. As you can see, I think from 2018 to May 2020, the price was around 200 range. Now actually the re-rating has happened. But if you see the I 52 week high, it is actually 397. So it has come down a little bit to 331. So if you're looking for regular income, you can think of buying this company. So of course there are two risks here. One is the fuel per barrel price in the international market. As you can see, this was 94, 68, 39 like that. But currently actually today's price, if you check, it is 83 or 84 dollars per barrel. So this is one. And second one, also government will keep on interfering in the policies to intervene. I think, as I understood, I think Modi government is not going to do that. That's also, I think, one reason I think these companies will have pricing power, and this stock can also get re-rated. So it is very safe bet. This is actually government company that is holding 55% of the promoter holding is there of ONGC, and number of shares anyway it is too much. Compared to the sales, you can see here, this is safest bet. Actually, they're making a sales of almost like 4 lakh crores or something. Market cap is very very less even compared to Indian oil and all. As you can quickly check here. Anyway, Reliance Industries we cannot compare because it is actually into diversified business, including Geo, Reliance, retail, and other things. But if you just check the IOCL, BPCL, and HPCL, you can see the market caps. I think HPCL is currently undervalued. It is, compared to these. Uh, if you see the sales volume of annual sales of BPCL and HPCL, both of them are doing almost the same sales. But if you see this market cap, I think it is almost like undervalued by 50%. Now there is a chance that this will get re-rated to double the price, around 600 range, to match the uh, market cap, sales to market cap value of BPCL, or and also you should get a dividend. I think that's why I would say this is safest bet, and you will also get a regular dividend income. And this company is also good because they are also doing regular buyback and all. If you can see from June 2021, anyway, I think this is quarterly result. You can keep seeing here. I think this consumption in India is always going up. That's why I think the sales also going up. Actually, if you see in March 2024, I think they were doing a sales of 2.34 lakh crores of sales, but currently it has already gone up to 4.33 lakh crores. Anyway, for another 6 years, there is no problem. I think India also pushing for this EV, electrical vehicles, but to stabilize that, I think it will need a lot of time. I think also there will be hybrid model and all, because EV independently is not so sustainable. If you look at the European countries and all, most of the car buyers are actually preferring hybrid, because if you just charge electric If you have electric vehicle, then if you charge it, I think you cannot travel more than, let's say, 50 or 60 kilometers. I think this is also one of the restrictions if you have pure EV. That's why hybrid is always the preferred one. So if you are within the city, then of course EV can be used. If you're going out of the city, then it is risky to have just EV because it can stop anywhere. And in India also, the charging centers and all these EV charging points are not that much uh, installed as of now. I think, of course, these companies are also tied up with the companies, and these petroleum companies also generate a revenue from that. I think, as per my understanding. But anyway, as you can see, this is actually uh, even in stock CAGR. If you see from last 10 year, it is generated 19%. It's kind of just sitting there and making money. This is one of the safest bet. And also Indian consumption will always be there for the petrol, diesel, and all. You don't need to worry about this safe and other things. Like, this is very, very safe. Another thing what I want to say is this company is really good. They keep on, if you see the equity history, they keep on doing the buybacks regularly. As you can see here, bonus or keep on buying the buyback and other things. So this company is actually also rewarding the shareholders with the buybacks and bonus issue. You can see recently also they have done a bonus issue of 1:2 actually. So if you can see here the dividend, so this has been declared for August 9th. This is the date. So still you have time if you buy it now. So you're going to get 16.5 dividend per share. Just to calculate, 16.5 divided by the current price is 331 into, if I make 100, so you're going to have a almost 5% of the dividend yield, at least for if you buy it today also. That's why it is safe actually. Till next month it is safe to buy. So if you're thinking of dividend income and safest bet, which can also double, I mean, of course, if there is no policy change and other things, I don't see that much will happen. But you never know. I mean, if there is a war or somewhere, and there is a tug of war between US and Saudi Arabia and all these oil countries, then the fuel rate can go up per barrel. But actually, it's also risky. If the fuel price goes up, the consumption will go down. That's why that companies also will suffer. I mean, that countries also will suffer. That's why usually they try to keep the fuel price less than $100 per barrel. So I think this company also exists for 100 years, so you don't need to worry too much. I think there is a very good chance here. If you're looking for a safe bet and also regular dividend income, please buy it. You can also see here, I think this year, this financial year 24, they have paid this much. So if I calculate this 15 plus 16.5, that is 31.5 divided by 331 if I do. So it's almost 9.5 is the dividend what they paid for last financial year. So I'm also hoping, I think they will continue paying this much because they are generating a lot of profit now onwards because of this, as I said, government policy and other things. So these companies actually kind of got independent, or they've been actually given a free hand to determine the price and other things. So you can see another thing is, these debtor days and inventory days. I mean, anyway, the inventory is not so very important because anyway they keep on refueling. Debtor days, I can see here. I mean, if you are buying fuel, always, you will always pay cash and buy it. That's why it is kind of a cash guzzling business as well. So in terms of promoter holding, you don't need to worry actually. This, as you can see, ONGC is holding almost 55%, and also TAS and FI is actually holding almost total. I mean, overall these guys are holding 90%. Only public is holding 10%. I think this is also a great opportunity when the public holding is less, so the price can also shoot up. If I go to DIS quickly, you can see here. I think HDFC is keep on accumulating here, and similarly, which company is this? So like LIC is actually a little bit sold, but however there is also new entry. This ICIC Prudential Multi Asset Fund has accumulated this. I mean, it's also an opportunity. As I said, this is really undervalued. There is a good chance that this can double actually from here. Kotak Emerging Equity Fund also, keep on accumulating. They keep on increasing, and some of them are also selling. I'm not sure of the reason. You can also see SBI Insurance Company. I think they have also acquired 1.04. Maybe they are also acquired for the dividend income. Not sure. So, but as I can see here, this is a safe bet, which is also paying regularly dividend, as well as though they're shareholder friendly, because they're continuously issuing the bonus shares, as well as they're also doing the buyback. So, if you're thinking for a good safe bet when the market is all time high, this is the right time. Please, you can think of buying it. Thanks and bye.